Good morning and welcome to the Quantum Leap morning leap session for Friday, May the 27th, 2016. It is Memorial weekend, so it is a holiday weekend. It's second last trading day of the month. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we come together here and take a look at the market, macro to micro, take a look at the structure of the market, drill down to the trade levels, the targets, and the hypotheses for the day. This is a subscription room, so if you're interested in checking it out, I'll put up my contact information. But before I do, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, if you are interested in checking us out, just send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live on the go-to, including live trading and analysis during the course of the trading day. You will need a Skype account, so send me a Skype request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. Skype is free to open and easy to do. If you like this video, check out over 2 years of them on YouTube at Quantum Leap Futures. And if you like what I do, follow me on Twitter at Crazy2. Okay, yesterday we were expecting a rotational day, a balancing day. That's exactly what we got. We got 7.5 point range. It was very tight, difficult to trade because it didn't move much, and it was basically a scalper's paradise, creating a very nice Gaussian distribution inside of the upper distribution of the P-shaped profile from the prior day. Overnight, we have had a 4.5 point range, and even with the GDP news, we were unable to make any movement. So this market is stuck right now. And just looking at the data last year we had 7 points on Memorial Day. We had Yellen speaking. The adjusted high for that date was 2095.75. And two days earlier, we had made a new all-time high at 2098.25 adjusted contracts. So, I mean, we're kind of right in the same scenario as we were last year. But you never know what's going to happen. Let's take a look at the news, because we do have news. We had preliminary GDP quarter over quarter and GDP price index. Basically we came in as expected. 10 o'clock we've got revised University of Michigan consumer sentiment and inflation expectations, but the big one is going to be this afternoon at 1:15 when Yellen speaks. So that's our news for today, not much else. Just going to our macro to micro, taking a look at the where we are in the different time frames. I start with the monthly, a 9 EMA, 20 SMA, and a simple candlestick chart. I'm looking for slope and separation where we are within the trend, if the trend is being challenged. We can see that we're starting to get the possible continuation pattern on the monthly, so this trend is still intact. So we've got to go weekly first. Weekly, we're holding the 9 EMA. We've got slope and separation. The trend is very much intact on the weekly. On the daily, same thing. We do have a bit of a technical gap, possible flag scenario. We have this weak high. We have like a quad or a quintuple top right now on the high at 92.50. I believe that this high is going to get taken out at some point day. The big question is it going to be a false breakout and we just simply break and fail, or do they go and try to go and get to that 2100 level? The key level above us right now is 2094. That's our next big target. Above that is the return of the scene of the crime of the Bank of Japan announcement, where we had that sell-off that started. Going to the intraday 4-hour, you can see very strong trend, good slope, good separation. We're losing a little bit of separation, but the trend is still very much intact on the 4-hour. On the 1 hour, same thing, good slope, good separation. We are losing a little bit of slope right now on the 4-hour, but we're holding above the 9 and the 20. Key level here is going to be the 2090 on the 1 hour. If we get below that 2090, then we could get a possible change of direction down. Going to the 30-minute, same thing. Everything is looking like it's trending up. We are seeing a little bit of weakness coming in right now. We're challenging the 9, but we've been trading in this two-point range for quite some time right now, between 92.50 and 91. There's a significant LVN, which we're just breaking now. We just broke a key LVN from overnight at 91. Going to the 15-minute, you can see we have broken down below the 9 and the 20 right now, so they are challenging this trend. There is a naked cross down here at the 15-minute at 89, call it 90 level, 89.75, 90. If they hold below and stay below this 91, then they're likely to come down, at least take out that naked cross down there on the 15-minute. On the 5-minute, you can see we have a bit of a rollover, and we're starting to come down, and there's a naked cross down here at that 2090 as well. So that's our key target right now, is to come down to this 90 and see if we bounce from there. Taking a look at the big picture structure, you can see that the 2-day balance right now is at 87 and a quarter. It's just slightly higher than the microcomposite VPOC from this last time we broke out of balance. We do have the exhaustion gap. We've got the initial gap, the continuation gap, the exhaustion gap. We're starting to struggle there, but this market just seems like it wants to gun for the upside. 94 is the next big level above. There is the 93. But I think if we break above the 92.50, we're going to go on a stop run, and this 93 is not going to sit in the way. 94 is next, and then the big line in the sand above us is still going to be this 2096.75, the value area high from this balance area from the last time we broke out of this balance. Below us, key level and key line in the sand is going to be the 82 level. And below that, I'm looking for at least to the middle of that of the gap at 78.75, possibly even down to close the naked close down here at 75, and that key price acceptance that we got the first time that we broke out for the first 3 days at the 75.50 level. Nothing really changes. Everything is the same as it was yesterday. We still have the same high we need to break. We still have all the same key levels, so it's all going to be, oh, there's the takeout of the naked close right there. Might even get a VPOC shift down here, right back down into this zipper area. This wouldn't be a bad area if you wanted to take a long from here. Let's take a look at the liquidity here and see how. Oh, they're starting to stuff it above at 90.50. Got a whale that's trying to push it down, might even get down into this 88.50 level. But if you were going to take a trade, this wouldn't be a bad spot to do it at the mid of the Globex at the Keltner center line, and see if we get a bounce up into the 91 to get funded. They just took out the naked cross, so they could bounce from here very easily. Okay. Let's go to the overnight session and start moving our numbers over. Obviously, we have the 92.50 high. This is a weak high. You can see that we hit it 1, 2, 3, 4, 5, 6, 7 times in the Globex. Wait a minute, 9 times in the Globex, and then yesterday in the Globex the prior day, or was it the prior day? It was what day was it? The 25th. What day was the 25th? So Wednesday. Yeah, Wednesday. So we've got 11 hits on this 92.50. So they're slowly chipping it away at it, and we should at some point in time go and break that weak high. So right now I am trading this to the long side and taking opportunities on any dips to buy towards the 92.50. So our overnight high is 92.50. Our overnight low, we just took more than half of the range back of last night on this one move. 2088. Our VPOC is still at 91.50, but it might change depending on how we start trading in this area. And of course, we've got the RTH high from yesterday. And then there's this LVN at 91, which is just above the value area high. I'm going to be using this value area high from yesterday as a key trade level today. If we hold above it, I'm looking for that 92.50. If we get below it, then I think we take out the overnight low and come down and take out the 87.50 naked VPOC. Not much else we need off of that, so we just get rid of that. Don't want to expand that big. Okay, so let's get our levels in. Of course, 91.50 is going to be another trade level. 86.50. 86.50 is going to be a warning signal that we could take out the 84, but I'm going to use 84 and a quarter as our warning line. Warning line simply means that we have to start shifting as a possibility to come down and take out the key line in the sand. And the key line in the sand, we've got the range low, but I am going to use the 82. So I'm going to use this and just move this up. Anything below this, then I'm targeting the half gap fill down here at 78.75 and the 75 area with 72 and 71. And then our next big key line in the sand is at 69. Our 20-day ATR is running at 23.55. So off of the 2092.50, 23.55 takes us down to 2068.95. Call it 2069. So 2069 is our daily ATR downside target. Off of the low overnight, which we could put in a new low overnight, 2088, but 23.55. Our upside ATR target comes down to, or goes up, I should say, to 2011, just above that rule of 10. Okay, our weekly ATR upside target does not change. Our weekly critical mass does. Our open of the week is 2053.25. We've got 1 day to trade today, 23.55 ATR, and our critical mass is 2076. So we are in critical mass. We are above our weekly critical mass. Not likely that we're going to take out this this weekly open. So we are going to probably end up in a positive week, 76.75. So there's our weekly critical mass. So my thoughts is we get, last year we had a 7-point day. We may have a 7-point day again today, and I think it's going to be all about Yellen. And we are in almost the exact same scenario where we were at an all-time high or near an all-time high as well. So the main hypothesis for today is a open auction in range, maybe just side out of value, but an open auction in range, a move down, take out the overnight low, and this VPOC come down, maybe test the the 86 level again, 85.50, maybe even 84 and a quarter, then rotate up through the 92.50 and come up and test the 94 with maybe a late day probe up into that 96.75. That is hypothesis one. So open auction in range, move down, find responsive buyers, rotate back up through the 92.50, break that 92.50 and chop around between the 94 and the 96.75. Hypothesis two is we open auction in range, come up, get a false breakout above 92.50, maybe even up to the 94, and then fail and come down through the value and come down into the 84 to 82 level. So basically opposite of hypo 1. Hypothesis 3 is we have an open auction in range, maybe an open test drive or open drive, and we go and we immediately break that 92.50, come up, chop around in between the 94 and 96.75 level, and then get a late day probe into the 2100 on news of Yellen speaking and sparking a move into the 2100. Remember, our daily ATR has us, giving us the range. I don't expect it because of the tightness that we're in and because it's a holiday weekend, but because we're above the critical mass of the week, the bears could capitulate and most of the traders are going to be on holiday early today, especially if we have a slow morning, and the remaining algos and junior traders may just drift this up into the holiday weekend. So those are my main hypotheses. The alternative hypothesis is an open auction in range, a move down between the 84 and 82, chop around here, and then on news, a push through down to fill the gap, or at least fill half the gap, and test the critical mass down here at 76. I don't think that we're going to get all the way back down to the week open, which is at 20.53 and a quarter. Our month open is 20.60.75, and we have 2 days left of that. So if we look at that, 23.55 times 2 is 47.10 plus 20.60.75. Our monthly critical mass is up right now at 21.07. Now, the only thing I'm not factoring in here is the holiday session. So we really have 3, but I discount the holiday session and only use 2 days of ATR. Taking a look at the Keltner, we're currently right now sitting just below it. The Keltner center line is at 89.75. A break below it will take us down into that 84 and our warning line. And the range low from the prior day. If we get back above it, a move up to the upper Keltner is going to take us up to the 95.75 level. Taking a look at gold, I did trade gold last night. I posted a chart in the room, so let's take a look at it. Got a possible technical gap going on right here. This is the trade I took last night. I took one on crude. I took one on gold. Same trade, same idea, and I got a nice run on gold last night. I actually got out at 12.22.80, and it was not a bad little trade. So I actually got all my profit back from that bad day I had early in the week yesterday. So. Just goes to show you, you have good days, you have bad days, but you just keep stepping up to the bat and swinging, taking swings. And if you do it right, you're going to get rewarded. Okay, gold right now trading back down. Don't forget that you should roll over gold to August. I'm going to be doing that. There's enough liquidity in both right now, in the June and the August, but I will be rolling to August over the weekend. I probably won't trade gold at all today because of the rollover, but I will be rolling over to August. They're starting to get some nice liquidity in that contract. That's it. So that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.